Joining us now on the show is Bhat, Managing Director, Dalton Capital Advisors. Mr. Bhat, good morning. I think the uptrend continues despite all the concerns with regard to inflation, with crude, with rising yield. How do you really read this?
Well, I think the party, as far as flows into mutual funds and therefore into the market, continues, because that is what is propping up the market. Plus, also you have, even though the export figures were lower than November, but I think export figures at 12%, 12.4% is something that we can be proud of. There has been a problem with the balance of payments. That is largely because of gold, and that is sort of seasonal, but I don't think that's a big issue. But if not for that, I mean, the IAP growth has been very good. I think that is something that is being seen after a long time. Plus, some of the quarterly results that have come, December quarter results have been good, and there is a lot of anticipation of the budget. So all this will probably keep the market buoyant.
So you stay bullish?
Well, I think it is a range-bound market with probably some sort of upside risk till the budget at least.
And how do you really trade or invest in this kind of market? Because you listen to any expert, he'll tell you that these valuations are completely unprecedented. It should not hold, it cannot hold, but market keeps moving. So, I mean, the common investor is really confused, what to do.
Absolutely. I think the valuation as an argument for buying has gone out of the window quite some time back. So therefore, I think that is not the argument at all. It's just about flows. And as long as the flows continue, I was just seeing this mutual fund inflows, but almost there is almost a 46% growth from the non-metro sort of inflows. So that's a huge number. So therefore, I think there is a real participation from the common sort of man as far as investing in mutual funds is concerned. And that is really showing up in terms of investment into the equity. So therefore, if this party continues, valuation as an argument is not probably very much valid during these times.
So what, okay. So, the reason why I think maybe Pradeep was trying to do this, and maybe I'll ask you the same question, is that somebody that we met went to this gathering of equity investors, wherein some people did presentation this Saturday in Bombay. 150 participants, fairly decent set of stock pickers, and that guy came and said that he didn't get a single fresh idea. It seems that while people are staying invested, they're running out of fresh investment ideas, but for a few scattered ones here and there. Now, is that an indication that we might have a bit of a tiring out even at the broader end of the spectrum?
No, quite possible. It requires one sort of strong negative news flow. Say probably the budget, if it doesn't live up to market expectations.
And what if it does, Mr. Bhat? Because earnings will live up to expectations, I would guess.
Yes.
Let's assume budget also lives up to expectations.
Yeah.
Then what?
Then I think the flows could continue. I mean, it is it's very difficult to call the top end of the market. We have been calling this for quite some time. Right. Most analysts have been. So, but the markets have proved us wrong. So therefore, this can continue. In fact, this is without large FII participation. If FII participation does happen, then I think the party can continue. It is at the same time you should always be sort of looking over your shoulders, as it were, to see what are the potential pitfalls. There are several such things on the horizon always.
Sure.
Korea is one, a messy Brexit is another. China is always a problem. It's built on leverage and liquidity, so that can cause problems. A quick sort of round of interest rate hikes in the US, that could be a problem. So all these things are there. But nevertheless, as long as the flows continue, this is completely based on domestic flows. But even if FII flows start reversing, instead of outflows, inflows come, I think this party could last.
Okay, let me ask you about pockets which might likely be undervalued. Now, it's been 3 months since the recapitalization news, PSU Bank recap was on, almost 3 months. I mean, give or take a few days here and there. In all likelihood, we are closer than what we were to these amounts being put in and there being some resolution thereof. We've also seen the IBC process kickstart and all of that. My question to you is, does 2018 become the year for the undervalued PSU banks? Can the numbers shore up in a way that it makes people be interested in the valuations? Because as of now, the valuations are there, but people are not interested because of past history. Can that change in 2018?
It could. I mean, the decapitalization has happened. All the recognition of NPAs has to happen, because the recognition of NPAs is not anywhere near its end because all these NCLT references, newer and newer lists are coming. So every time there is an NCLT reference, you have to provide 50%, and I don't think most of these banks are anywhere near there. So therefore, continued sort of provisions will be required. So probably in the next, we have almost 11 months now. So 11 and a half months, I think things should happen. Hopefully, and my own view is that whatever the 2,10,000 crores or something capitalization might probably cover the losses, but really not give enough room for growth capital. I think that money has to be raised by these banks from the market. So I think all this agenda is there. If hopefully by 2018 this should get completed. And if we see that we are somewhere near the end of all these problems, then I think market will start recognizing value in PSUs, PSU banks. But I think it's a bit too early now.
So right now you are not buying into PSU banks?
Well, I think too early because I think we have not heard the last of the NPA woes. With the NCLT list, sort of extending every now and then. So I think some sort of closure has to come there, and only after that I think they can think in terms of providing for it and raising more capital.
Okay. And what about the private names? Yesterday we saw this announcement of Capital First and IDFC Merger, but both stocks actually came under profit booking. So in spite of a compelling case where people see a lot of upside, fundamentally potential for growth, are these stocks really, finely priced at this point of time?
Well, I think the pricing is, as I said, valuation is never an argument for most of these. But the fact is, I think there's a fundamental change taking place because of the delay in putting the PSU banks in order. There is a huge shift in terms of market share. So the market share gained by the private sector banks and in fact even NBFCs is something that is happening very gradually. And in fact, if you see over the last 5 years from about a quarter to more than 1/3 they have come. That is their market share. So there's a dramatic jump. So I think the market share gain is something that is getting reflected in the valuations. And if, in a manner of speaking, the PSU bank story is something like what happened in telecom, something like what happened in the airlines in slow motion. And unless something gets done on the PSU bank front, I think this can continue for some time and there's a dramatic market share gain. I think that is what is getting factored into valuations. And in due course, I think something has to give.
By the way, you have a view on? Do you have a view on the Capital First IDFC merger? Because we get highest number of queries on this. What is really interesting, we have seen 4 licenses in last 15 years or so, but getting a license is probably not a guarantee. So should you really bet on a bank because it has got a license? It's a full-fledged bank, or maybe NBFCs have got a stronger story if they are well managed, and you could stick to it even if they are quoting at a premium.
Well, I think what happens is the NBFCs generally lend at much higher rates than banks can, and so once they become banks, I think it will be very difficult to substantiate that sort of interest rate, because the interest rate regime as far as banks are concerned is quite well regulated, and you have to have an explanation as to why you are charging so much. The risk premium has to be justified. So that may be difficult for banks to do. NBFCs can get away with it because the level of control there on interest rates are much lower. So therefore, I think that is something that the market probably seems to be pricing in. But otherwise, I think NBFCs will continue to have a good run because I think they are also participating in this the retail growth story and gaining the market share from PSU banks.
Okay, I just have one last question, Mr. Bhat, and that's on this whole commodity uptick and derivative commodity upticks as well due to various reasons. One is the China demand. Yesterday, recently we've seen the pellet prices move up because of that ban in Orissa as well. Anything out here, not in terms of a stock, but a theme that looks sustainable?
See, as long as China continues to buy the way it does, I think metals can see continued interest in.
Across the board, you would
Across the board, it does. But, this has happened in the past. There has been a lull there and suddenly the market has collapsed. So these things could get repeated. And, it's very difficult to sort of forecast what China is going to do next. So therefore, I think one needs to be very watchful. But as long as the going is good, participate in it.
Fair call. Mr. Bhat, we'll leave it at that. Thank you so much for taking the time out and joining us today.
My pleasure. Thank you.
That's Mr. U.R. Bhat, Important Market Voice.